Hello guys, welcome back to Transformation Academy. And before we dig into this video, I just want to apologize because it's been months. It's been a really long time since I posted a video. And to those who subscribe to the channel, looking forward to new videos, to new uploads, my apologies. I am so sorry for that. But I'm back now. To be honest, I was waiting for the right moment to start posting videos on my YouTube channel, waiting for the bling for when I was funded so that I can show off money and stuff like that. But then I decided, you know what? No, I'm not going to wait for that. I'm going to show you guys the grind now. I'm going to show you guys the history now, such that when I do get funded, it's going to be one hell of a journey, one hell of a trip, such that we have something to show for it. We have something to look back on and be like, yo, do you remember when we were posting videos with our phone and stuff like that? So yeah. So I'm going to be using my phone for the videos. My laptop is somewhere. It's not with me right now, so I'm going to be using my phone to post videos, to create and post videos. So in our last video we talked about premium and discounts, and essentially we talked about when it's the most safest to look for longs and when it's most safest to look for shorts. And we said that if you're looking to get into a short position, you want to wait for price to get into the premium zone. And if you're looking to get for longs, it's best to wait for price to get into the discount. Okay? But then are you going to be randomly placing orders the moment price gets into the discount? Are you randomly going to be placing short positions every time price gets into the premium zone? It's not going to make sense. You're going to suffer drawdowns. What if price goes into the premium and keeps on buying before it starts shorting? Or what if price goes into the discount and keeps on selling before it starts buying? So yeah, today in this video, I'm going to be telling you guys and showing you guys when it is the right moment to execute a buy order and when it's the right moment to execute a short order, a sell order. Okay, so let's begin. So in this video, it's going to be titled order blocks because it's the zone you're going to be looking to execute a buy or sell is an order block. Okay, so what is an order block? So I did some research and looked for the best possible definition I could give you. So we've got three definitions here. Okay, and you're going to pick the one that suits for you. But for me, I'm going to be giving you the short definition, best for YouTube. An order block is the last bullish or bearish candle before a strong move in the opposite direction, showing where institutions likely place large orders that can act as future support or resistance. Okay, so an order block is the last bullish or bearish candle before an impulsive move in the opposite direction. Okay, so what am I saying? These candles that you can see right here, these candles, they're all bearish candles. Okay, so we've got our first bearish candle, we've got a second bearish candle, and we've got our third bearish candle right here. Right? Third bearish candle. So essentially, these candles, they all have one thing in common. They're going down. Right? They're going down. Sorry about that. Let me remove that. They're all going down. Okay? So since they're all going down, this is an impulsive move to the downside. So since this is an impulsive move to the downside, we're going to be looking for the last bearish candle before this entire what? Before this entire bearish move to the downside. Okay? Great. So let me remove that. Okay. So the last bearish candle to the downside would be this one. Okay? Because that's the candle that initiated this entire rally to the downside. Okay? That's the candle that initiated the entire downward movement. So since this is the last, or let me say first, bearish candle to the downside, we're going to be looking at that as our order block. Okay, great. So then now we've got order block, right? So we take our rectangle, and then we set any from down to up here, and then we stretch it out. Okay, M15. We stretch it out. So this is our order block. Okay, so This is our order block. We found the last bearish candle before the entire downward movement, okay, which is great, fantastic. But then you can't just say this is the last candle. How do you know that this is the last candle? Okay, because when we're looking into the market, it's not as simple and as easy as it is right now, as I'm showing you as a theory. It's going to be difficult to find the last bearish or the last bullish candle before the upward movement. Okay, great. So how do you identify the order block? Okay, so this is how you identify the order block. You see this last wick right here, boom. This last wick right here, this first candle's wick, and this third candle's wick. Okay, so an order block is basically how you identify an order block is by a 3-candle formation. 3-candle formation. Okay, so what's a 3-candle formation? So we've got our first order block, our second order block, and our third order block. So between these 3 order blocks, you want to take the first candle, the first candle's wick, and the third candle's wick. Okay, if these wicks do not meet each other, you see what I'm seeing right here? Let me remove that. Oh, sorry, my bad. Let me get back the candle, right? I want to remove this one. How do I remove? Okay, this. Remove this as well. No, I'll remove that. This line. Okay, great. So you see this last candle's wick. You see this last candle's wick, and then this other candle's wick. You see this gap right here? This gap between these wicks. This gap right here is what we call a fair value gap. This gap is the gap that shows you that this right here is our order block. Okay, great. So now that we've gotten that out of the way, since now you see that there's a gap, if this wick right here had gotten up until here and removed any necessary gap in between, then this candle would not be our order block. Do you get what I'm saying? There will not be an order block, and there would essentially no zone for you to be looking for shorts. Okay, because after price gives you this gap in between right here, right? And then now we have our order block, which is this one. Order block will be this one, right? To here. And then we have our order block, M15, right? Or 4 hour, depending on the time frame you're using for the order block. Essentially, what we're waiting for is we're waiting for price to sell and then come back into the order block and then reverse again. That's the whole idea of an order block. Okay? Some people they want to use the zone right here and then price sells. But then I've seen that for it to be safe, you just want to wait for price to get into the zone, the order block, this order block, and then price sells again. Mumbo jumbo. Done. Okay? Great. So now that you have identified a bearish order block, the one you use to look for what? To look for shorts. You want to go and look for how you look for an order block for longs. Okay? And the illustration is right here. Okay. So as I said before, an order block is a 3-candle formation, a 3-candle illustration. So we've got our first order block, our second order block, and our third order block. So essentially, these gray candles, for my trading view, we've got green candles showing bearish momentum, and we've got gray candles showing what? Bullish momentum. So these candles are essentially showing a what? A high move to the upside. Okay, an impulsive move to the upside. So since it's an impulsive move, we want to go to the origin, to the baseline, the beginning, where it started before this happened, the beginning. Okay, great. So now that we've found the beginning, essentially now we want to look, the next thing we want to look off is a fair value gap. After you've determined the bullish move to the upside, now you want to look for a fair value gap. And how do you find a fair value gap? Essentially, first you identify your 3 candles. 1, 2, 3. And then you'll look for the first candle's wick and this candle's wick. The gap in between right here, this gap between this wick and this wick is your fair value gap, okay? If there was no wick, if this wick right here went all the way down and covered this previous wick, if there is no gap whatsoever, then there's no order block. There's no order block. It's as simple. It's that simple, okay? So then now that you've identified your 3 candles, now that you've identified your gap in between, your fair value gap, now you typically just put your order block, which is this candle right here, down here, and then boom, you've got your candle M15, right? So now that you've identified your order block, see, as you can see, the first candle's wick, right here, and this wick right here, they're not touching. There's a gap between this candle and that candle. There's no touching. And once you've identified that, and then now you have your order block. So now what you're essentially waiting for, you're waiting for price to rally up and then come back down into the order block and then go up again. Simple. That's that. Now that we've covered the basis of everything, we're gonna have to go back to the charts, and then we're gonna remove all this, remove all that, and then we're gonna go to the live charts themselves and identify firsthand what an order block is. Okay, great. So this is Euro USD, and we're gonna be looking for an order block using Euro USD. Okay, so I'm just gonna, essentially this line was supposed to be here as a swing high, so I'm gonna put it back, M15 swing high, there we go, swing high. Okay, great. So I'm gonna go back here. All right, so essentially what we have here is we have our structure, our basic structure, the one that I posted months back. Okay, so we've got a bullish price action. Price is going up, right? We've got a bullish price action, and then essentially what we have here is we have our higher high, and we've got our lower low, and then price essentially was supposed to come here and then sell again, but then price being price, it's not exactly, price doesn't work according to our expectations. Price gave us a lower low, and then price gave us a higher high again, and then price gave us a lower low. So to most traders, this is going to be confusing as hell, because okay, fine, we got ourselves a lower low and then a higher high again. It doesn't make sense. We've got a change of character and a break of structure at the same time. It doesn't make sense, and price doesn't have to make sense. All you have to do is apply what you know to the markets. It's that simple. Don't complicate the situation for yourself. Okay, great. So we've got our higher high, lower low, higher high, lower low. Okay, it's okay, it's great. Just play according to structure, and then after that we've got ourselves a higher high. All right, so now we've got a higher high. So now that we have a higher high, what we're expecting price to come back down, pull back, and then go up again. It's that simple. You are playing to what structure is telling you. If price is showing you crazy movements like these right here, don't be confused. Okay, just take it as the structure comes. Okay, don't confuse yourself and be like, okay, fine, what am I supposed to do now? Okay, don't do that. If you do that, you're gonna complicate yourself. You're gonna hurt yourself. Okay, great. So now, since now that we have a higher high, what we're waiting for price to pull back and then higher high again. Okay, since now price is bullish. Okay, great. So now that we've got that, now what we do after this is we put our fib, right, to determine where price needs to be for us to be looking for longs. Okay, So put a fib here from the highest to the lowest. Right here. Okay, great. Now, price needs to come into this zone right here before we can look for longs. Okay, so price can double down. But as long as price isn't in here, we don't look for longs. Okay, price will be like, okay, now it's going up. Let me look for long. But no, as long as price is not in this zone right here, you don't execute in long positions. You wait for price to get into the discount zone. Okay, so then price goes up, price plays around, it's going up, but price is not in here. So we don't look for longs. We don't. We wait. We sit on our hands and we do nothing. See, price is going, and then boom, price essentially plays into our what? Into our discount zone. But then here's the deal. Are you gonna be executing long positions because price isn't here? Long position. Of course, your position may be going into profit because now price is going up, right? But then what does price do? Price comes back down again. Yeah, you were in profit and you're targeting this high, but then you're in profit, price goes down again. Okay, goes down and it goes below your buy orders, right? And then price continues to sell. Are you going to be executing more buy orders? And then price goes up again, you're happy, and then price goes down again, and then you're sad. You know, it's not gonna make sense, right? So what you're gonna do? How are you gonna know that this is the final leg? This is the final down before price goes up. How are you gonna know that? How are you gonna predict that this is the final leg before price goes up? That this is the final leg before price goes up? How are you gonna know that? The only way you're gonna know that is if you have an order block. And how do we find an order block? Let's remove this entire mess. How do you know that you have an order block? So, an order block, as we've said before, is the last bullish candle before an impulsive move. Okay, so we're going to be looking for order blocks in the discount in here, right? Okay, so let's look for an order block. So we're going to start here. Let's start here. We're going to start at this low, right? So essentially, we've got this impulsive move to the upside, this rally up. Okay, great. And then we're gonna look for our 3 candles. So essentially, in our 3 candles right here, we're gonna have this first bearish candle is our first candle, second candle, third candle. Okay, great. Now that we have that, we're going to look at the first wick, this candle's wick, and the third wick, which is this wick. Since this is our first, second, third. Okay, great. So now, as you can see, there's a gap. There's a gap between our last candle's wick and the third candle's wick. Okay, there's a gap. And this gap right here is what we call what? Our fair value gap. Okay, and I know a lot of people are going to be asking, okay, fine, your first candle is not a bullish candle. Yeah, sometimes the first candle may be bearish, but as long as there's a gap, as long as there's a gap between this wick and this wick, as long as you've got a 3 candle formation, 1, 2, 3, as long as you have that, you're okay. Okay, so then now you've got your order block. Okay, it's an order block. Okay, you've got your order block. So then now you put your candle, you put your triangle, and then boom. But then your order block quickly gets mitigated, right? As you can see, price rallied up, price came into this order block, and then moved upwards. As you can see, it was a valid candle. Price moved up, right? Order block mitigated, okay? But then no, we're looking for what candle the price can come back to after coming into this high. You're looking for a candle that price may come to mitigate to go back up again. So we can't use this candle because this candle was already mitigated. This candle was already mitigated right here. So this candle, we can't use it anymore because it's invalid. It's been mitigated, okay? So we remove it. And then we go in search of our, for our next candle, okay? We're looking for our next order block. Okay, so now, no order block here, no order block. Every candle has been mitigated. And then you want to go to here. Okay, what do we have here? What do we have here? Right now, what we have here, we've got our first order block, first candle, second candle, third candle. Okay? Our third candle being, let me use an arrow. So we've got our first candle right here. And we've got our second candle. Let me remove the magnet. We've got our first candle right here. This bullish candle. We've got our second candle right here. And the third candle right here. This large bullish candle. Okay? So with that three candle formation, we can tell that this wick, this candle's wick, and this wick are not meeting each other. That's a gap. There's a gap, right? And this gap right here, is what we call our what? Our fair value gap. So what we do, we take our, let me use a weak magnet, and then we use this candle, and then we stretch it out. As you can see, with this bullish momentum, price left an order block, this candle. And then as it went up, it tried to come back to mitigate, but then price didn't mitigate. As you can see, price left, there's a small gap, price didn't mitigate. This gap right here, price didn't mitigate. This gap right here is our, what? Is our confirmation that this order block was not mitigated, okay? So now that we have an order block, this candle, this is our order block, right? We remove these situations, to make our charts cleaner. Okay, now that we have our order block, okay, we continue looking for other order blocks. Price may give you more order blocks going upward, okay? We look for more order blocks. As you can see, we do have a three candle formation right here. We've got our three candle formation, right? We've got our first candle, this bearish candle, second candle being our bullish candle, third candle being this bullish candle, okay? So we've got 1, 2, 3, right? And then, as you can see, between the first candle's wick, right here, between the first candle's wick and the third candle's wick, there's a gap. This gap right here is your what? Is your fair value gap. And then now that you have a fair value gap, you have an order block, which is the first candle, this last candle. You've got an order block right here. This is your order block again. So now we've got two order blocks. We've got that order block and this order block, okay? We keep on looking for order blocks as we go up with price, right? Okay, and then boom, we've got another order block. We've got, I hope you guys are catching on now. We've got the first order block. We've got this first candle right here, our bearish candle. Second candle is a bullish candle. Third candle is a bullish candle. And as you can see, between the first candle's wick here and the third candle's wick right here, we've got a gap, right? We've got a gap. Okay, let me remove the, okay, there we go. We've got a gap. This gap right here is your what? This gap right here is your fair value gap, Okay, great. It's your fair value gap. And then now that you've got a fair value gap, what do you have? You've got an order block. And what's your order block? Your order block is this bearish candle right here. That's your order block. So now we've got 3 order blocks. We've got 3 order blocks. And we're still in the we're still in the what? We're still in the discount. Discount right here. This is your discount. And now we've got 3 order blocks already. So this is going to be tricky. How are you going to know that this is the valid order block? I'm going to teach you that in a second. Okay? Great. Now that we've got 1, 2, sorry, we've got 1, 2 right here, and then 3 order blocks. This is becoming crazy. And then now price goes into the what? Into the premium zone. Price now goes into the what? Into the premium zone. So now we no longer look for order blocks, but then price came back down into the discount. And then before price rallied up, giving us a break of structure, price gave us our final and last order block. Do you guys see it? Do you guys see the order block? Okay, so we've got our first candle. Our first candle, this candle right here, this bullish candle is your first candle. Second candle, this large candle. So these candles are essentially created by news events. Okay, so there was a CPI that created this large candle. And then we've got our third candle, this one. This bearish candle is our third candle. So we've got third, second, and first candle right here. Okay, great. So now, as you can see, between this wick, and then that wick, we've got a large gap. This large gap is our fair value gap. Now that we've got a fair value gap, what do we have? We have an order block, our 4th order block. Okay, boom, our 4th order block. Right. So now we've got our first order block, second order block, third order block, and 4th order block. My God, we've got so many order blocks. Okay, so essentially, I'm gonna teach you. Since you've got all these order blocks, essentially for me, what I have noticed is that don't look at these order blocks. They don't matter. Okay, they don't matter. Sorry, that removed These, they don't matter. The only order block that matters is this last, the baseline. The first order block you found is the valid order block. Is the order block that price is going to come back to mitigate. Okay. But for lesson's sake, I'm gonna return the order blocks. Right. I'm gonna return them, and then we're gonna see that I was right. Okay, so the first order block. This is the 4th order block. Let's trace it and see what happens to the first order block. Boom, price mitigates, and as price mitigates, price rallies up, and then you may have placed your orders right here, and then boom, price goes up, you're in profit. Amazing, beautiful. Okay, beautiful stuff. And then you place your long order here, your stop loss. Typically I go about 10 pips below, and then you're rallying up. So essentially your take profit is going to be up here. That's your take profit. Okay, and since that's your take profit, I'm gonna remove the fib. Okay, and then boom, price goes up, price come down, and then boom, price goes and hits your what? Price goes and hits your stop loss. Right? It's your stop loss. Boom, you're losing. You're now in a 1% loss, and oh my God, it's crazy, right? So then this order block failed. Okay, it failed. Now let's go to the second order block. I'm gonna trace it. Do this for quicker. Then boom, price mitigates the order block. And then my God, my God, price mitigates your order block. I'm picking the wrong side. There you go. Price mitigates with a sniper entry. You place your buy order, and then price rallies up. You're happy. Oh my God, the first one may have failed, but at least the second one, price cuts in, right? The second one gets in, and then price is going in your favor. But then what does price do? You place your long position right here, stop loss right before the low, and then price hits your stop loss right here. Boom, you're out of position. Sorry about that. You're out of position. And then your take profit most likely would have been up here, right? And then price hits your stop loss again. And you're wondering, oh my God, what's happening? First trade was a loss. Second trade is a loss. Okay, fine. Let's go to the third order block. This one's gotta be a winner, man. So I'm just gonna trace both of them so that we don't keep on coming back. Okay. And as you can see, as price hits your second order block, it goes into the third order block, right? And as it goes into the third order block, price rallies up. And oh my God, that is such a buy. And at this moment, you're thinking, okay, this is it. This is the order block that may give me a full take profit. Okay? Stop loss below the low. And then your take profit is up here. Great. And then price goes up. The highest price goes is here. This is the highest price goes before it starts coming down again. And then boom, stop loss hit again. At this point, it gets frustrating. For real. Because like, first loss, second loss, third loss. I mean, come on. What is happening? What is happening? But then, as I told you, the baseline order block is the one that wins. And then price comes into here. And now I want you to notice something. When it comes to order blocks, an order block is only violated if price breaks below the order block. Let me remove that. What happened? Oh yeah, okay. An order block is only violated if price breaks and closes below the order block, okay, with price. As you can see, price came here and then price broke and closed below this order block. So that means this candle has been what? It's been violated. This order block has been violated. So we remove it. And then we've got our final order block. As you can see, price came in, it wicked. Price did go below, but it didn't close. As you can see, the candles closed above. The candles closed above the order block. It wicked again, but it closed above, right? And then price rallied up. Boom. So now what you have is your final order block. Okay? You've got your final order block. And then you place your long position. You place it, you play your long position here. Sorry about that. The magnet. Oh my God, the magnet. Okay. You place your long position. And then stop loss below the low. And then your take profit would have been up here. Stop loss. Your take profit up here. And then essentially you're gonna have to be going to there's a lot that comes in with order blocks. You don't just enter to the M15 blindly. You wait for confirmation. And since price only wicked, we're going to determine this order block is still what? Still valid. As you can see, price gave the highest, price came in and gave you the highest move ever. As you can see, this is the highest that price ever been. But then as you can see, if price was mitigating in the other order blocks, it never came as highest before. It only came low. You see what I'm saying? And then price goes up here. Price is still moving. We're here now, and then we're still expecting price to go all the way up here to take out the highs. Okay, and as you can see, price did give us a really long range. I mean, look at this. This range is one of the craziest range I've ever seen. It's one big long range, and it sucks. It truly sucks because you're waiting for days waiting for price to mitigate you, and it sucks. But then, as you can see, price only valued the last order block. Why? Yeah, price did wick the last order block, but then price did not violate the order block. The order block is still valid. Why? Because price didn't break and close beneath it, so it's still valid. Okay, so that was a long video. I'm getting tired there myself. So that's how you pick order blocks. In the next video on order blocks, I'm going to be showing you. In the next video, I'm going to be talking about fractals. Okay. So to those who didn't understand, to those who've got questions, do leave them in the comment section, and I will attend to them. I'll from here and there, I will be posting videos answering your questions. Okay, because there's a structure I'm working with these lessons. First of all, it's basic market structure, and there's multi-dimensional market structure, and then we've got how to identify pullbacks, and then after pullbacks we've got premium and discount, and then after premium and discount we've got this order blocks, and then after order blocks we've got confirmations, how to confirm that this final order block is now going up, right? That this final order block is now going up again. Okay, so anyways guys, this is the video on order blocks, and then in the next video I'm going to be talking about confirmations, how to confirm that after price gets in here, how do you get your lowest risk in high return. Okay, so thank you guys for watching, and to those who have questions, do send them in the comment section, and please do press that subscribe button, because these days I'm going to be posting videos maybe weekly or monthly, but I'm going to be posting videos, and I'm also going to be posting videos on the past trades that I took, such as this trade right here. Go to this trade right here. I took it was a short position on GBP/USD. It paid around $111, 1% profit. So yeah, I'm going to be showing you guys those type of videos. I'm going to be posting videos on trades that I took and all that stuff. So anyways guys, this is the end of the video. Please leave a subscribe button, leave a comment, and then I'll see you in the next one.